This is the Build Tech Stack Equity Podcast. We dive into the inspiring stories of underrepresented tech entrepreneurs and investors. This episode is courtesy of Tesoro AI, the #1 recruiting firm for software development and AI talent.
All right, Theo, welcome to the show. I appreciate you taking some time out to join us.
Hey, Darius, definitely always good to see you, and I'm excited for the conversation.
Absolutely, man. So for the audience, Theo and I have been friends for a while now, dating back to before business school. So it's always great to see friends turning into rock stars. So where I want to kick things off, really want to talk about, your background, pre you becoming a professional, but I also want to talk about you starting off in finance, being on the alternative investments side, and then also transitioning to tech, and then eventually we'll get into your role as an emerging manager of a VC firm. But we'll love to just get that context into who Theo is.
Yeah, well, thank you, Darius. And before any of that, I always mention that before moving to New York and getting into alternative investments, my life started in New Iberia, Louisiana, as someone raised in a rural town and just focused in on education and focused in on being able to produce the life outcomes that I wanted and my family wanted. And so to me, that's the most thing that guides me and that has guided me across my career. I actually started my career after undergrad raising money at LSU Athletic Foundation. And in many ways, this is not something that gets talked about a lot throughout my career because I've had some other milestones. It provided me this really compelling bridge between just being a young kid with ambition to diving into the world of business and talking money fluently. And so in my early 20s, I was thrusted into raising capital from wealthy individuals and families on behalf of LSU athletics. And, this is a $120 million a year enterprise, just talking about the football side. And so that gave me a pretty good groundwork for really client service and client communications. And after business school, I was then able to bridge that into the finance world. And so my first job in finance after business school at Rice was at TIAA, or Nuveen, as the division was renamed during my time there. And working in alternative investments, I had the distinct pleasure of very early on having client interaction. And that specific client interaction wasn't just with high net worth or family offices. It was with sovereign wealth funds and the largest pension funds in the world, not just in the US, but across Europe and the Nordic region. A lot of people in finance will speak about the Nordic pension funds and institutional capital from there. It gave me a foundation and a grounding in what it meant to build alternative investment portfolios for those clients, the things they were worried about, how they thought about risk. Because we think about risk generally, like, especially in traditional finance, you'll think about risk in a certain way. But these institutions think about risk in 100-year, 200-year timelines, right? Because they're managing wealth on behalf of a nation or on behalf of, a sleeve of a nation through their government sort of subsidized pension funds, I guess you could say. And that was my first foray. And I think that was specifically unique and crafted a lot of the journey that I've had since then.
Yeah. So when you say alternative investments, and I know not everyone is kind of deep into the finance world, what does that mean?
Yes, it's a great question. So stocks and bonds are traditionally considered traditional investments, and everything else is alternative. So even real estate, as people think about it, that's an alternative investment, because it's not, hey, you just put your money in a stock with a stockbroker and buy stocks or buy bonds. Typically, the asset classes that I touched the most during that time of my career were the more esoteric alternative investments. So investments in farmland, investment in timber, and agribusiness private equity, which agribusiness is just the processing, packaging, and shipment of foods, right? So that could be salmon business and almond business, all those of that sort. Farmland and timber is exactly what you think it is.
Uh-huh.
It's parcels of timber, timberland, and farmland that eventually would be yielding investments, right? So they would spit off some sort of distribution to the underlying investors that would give them an annual yield. And it's a very interesting product. And once again, because of having that very niche experience early on,
Hmm.
gave me a fascination and also just an appreciation for the nuances of investment vehicles and investment asset classes. And probably is one of the reasons why, as I have gone into venture capital over the course of my career, why nothing seems too out of bounds for me in terms of an investment realm, because I've seen some very interesting things done well, and I've seen how institutions in the right place are looking for those types of investments.
Yeah. So this is I mean, because I know the story, this is some interesting foreshadowing, right? Like, first, you get experience going out, talking to high net worth individuals, effectively influencing them to invest or, invest back into their alma mater, into LSU's athletic program, right? So there's an element of raising funding. And then you move into the alternative investment space where then you're starting to understand how they think about asset allocation, how they're going to put that next dollar and, get risk adjusted returns. Right.
Yeah.
Talk a little bit then about your transition onto the tech side.
Yeah. So it started actually while I was still at this very large organization, because I started seeing interesting things happening in blockchain.
Hmm.
And we were farmland investors, and there were some words about like things that were happening with blockchain and farmland. And so triggered my interest. I dove in pretty deep. And it led me to this realization that the world was starting to shift. There were interesting things happening, and there were new ways of doing things in traditional industries. Because of that, I ended up joining a fintech company after that was well regarded, a stellar entrepreneur at the helm, and then a number of large respected venture capital firms were backing this company.
Mhm.
And what I quickly learned is that working for a large business that manages $1 trillion of assets and working for a Series C startup are two completely different things.
Yeah.
And partially, I started angel investing because I just wanted to better understand what was going on in the tech world. And I
Okay.
realized that it was so vastly different than what's happening in sort of our traditional finance and law and consulting type industries, that I needed to really delve in. And I felt the best way to do that was to put some of my own money on the line to learn what was happening in the industry and to keep abreast of trends.
Hmm.
So I did so. I became fascinated with that. And then, frankly, became fascinated with not just investing in companies, but digging down deeper and figuring out how to help these entrepreneurs scale their businesses and their ideas.
Mm. Okay.
That was the biggest realization to me, was that investing is a necessity, but having a fascination and an obsession with the scaling of businesses is
Hmm.
really what venture capital is about.
Hmm.
And so I invested in a few funds, I invested in some companies, and for what I think that portfolio, hopefully it will do well for me personally over time. So, but after some years at that fintech company, and then investing and starting to see how much I really enjoyed working with businesses that were venture backed, I delved into the venture capital world. And I was, very blessed to be able to get a really good seat in venture capital. And I consider the seat that I had to be probably one of the best in venture capital, because I sat within one of the largest corporate venture capital funds, and that's Salesforce Ventures Fund, which is an extremely big fund, a multi-billion-dollar fund. And, I was able to sit within the portfolio development function there, where I could work with startups in the portfolio, as well as work with large corporates to understand how those startups and those corporates could forge partnerships. That combination, I believe, has become more and more valuable as we've moved out of a realm of fanaticism in venture and more back to some traditional fundamentals, which is
Right.
nice because, going back to understanding that businesses are only as good as their ability to generate revenue and scale at some point. And that was a really compelling seat to sit in and understand, once again, how a firm that sits within a larger business that has a market leading position in their product set, how they view innovation, how they take a sort of long view when the rest of the market, can move very fast and take a short view, what it is that corporations need, because they're eventually the end customer
Yeah.
of almost technology across the world. And so what do they need? How do they think? How do they process what risk looks like? Gets back to, some of my early experiences about how people think about risk. Large corporations think about risk in a certain way, especially when it comes to tech stack. And that was my foray
Yeah.
into venture. And it's been a fascinating journey. And now that I'm sort of on to being an independent emerging manager, all those lessons have really compounded, and I bring them to work with me every day.
Yeah. So I do want to put a pin in that, specifically what you said about building technology for the enterprise and how the enterprise thinks about what investments they make as a buyer, right? As a buyer of the technology or a potential acquirer. Because, in my experience in software investing, everyone loves to go out and get that large enterprise client, that big check, that 3-year contract. But it's more than just thinking through how long the sales cycle is, which a lot of folks don't truly understand, but there's also other implications. So I do want to get into that. So let's put a pin in that because I want to get your perspective. But so then Salesforce Ventures, working within the venture capital arm, so corporate venture capital, and then eventually you come up with this idea to become an emerging manager, right? A fund manager yourself. So where did the idea, because look, Salesforce Ventures, great job, probably nice paycheck. Why hop out? Why take the risk to then go and try to do something that's extremely hard, which is raise a first fund, launch a VC firm?
Yeah, Darius is a great question. And almost everyone in my life has asked me that question. I think fundamentally, I view venture capital as jet fuel to help solve issues. And I experienced a specific issue that led me to say, over the course of a few steps, that led me to say that there's a category that needs more investment, capital and time and expertise. And that industry is the space technology industry. So to give you where it started, a few years back, while I was at Salesforce Ventures, I was at a family member's house in South Louisiana, and I was trying to take a Google Meets call, and the internet kept crashing. And it was so slow that my entire computer would shut down when I clicked join Google Meets call. And this is not across everywhere in South Louisiana, but it definitely was in this smaller town at a family member's home. And a colleague said, "Hey, you should just buy Starlink for your family. Like, it'll be fine. Buy Starlink." And I was like, "What is Starlink?" And I learned that it's space-based internet. So now I'm asking questions. Space-based internet, why does this exist? How does this exist? What is it? I'm thinking fiber optic cable is the only way to get broadband. And so I said, okay, this is interesting. Why does it exist? And then I learned more about the changes happening in rocket technology, which has made it cheaper to launch satellites. And those satellites are now providing broadband internet service to a set of people that arguably you could say about 40% of the world is still disconnected from a proper internet connection. That was interesting, but I never really saw the industry as something that I would delve that deep into professionally. I thought maybe I'll make some angel investments in this. It's pretty cool. Most people get excited about space. You keep a few step functions in and a few rabbit holes in and articles and all that and research, calls with some experts. Once again, thinking I'll make a few angel investments. What I start to see is that space is a broad data ecosystem. And every satellite in orbit is responsible for gathering and transmitting data. If you look at some of the stats, and these are all sort of estimates, but if you look back in 2010, there were about 1,000 satellites in space. Today, there are a little over 9,000, it's expected that number can grow to 50 to 100,000 by 2030.
Mm.
What do we know, Darius, about technology is that if you build infrastructure for 1,000 objects and that grows to 50,000 objects, that infrastructure, you need some updating.
Right.
And this is the baseline of how I said, you know what, this realm needs a new infrastructure to get that broadband internet to people, to take images of Earth that allows us to better manage climate change, to better oversee crops in the agriculture realm, to better monitor forest fires, hurricanes, all these things. The best way to do it that exists today is utilizing satellites in orbit. And the best way for that data to get back to us as quickly as possible and as efficiently as possible is a better and improved data infrastructure for the space world.
Mm.
And when I talk to entrepreneurs in this area, what I found was that some of this was getting lost in translation, and I was able to speak that language. I come from an enterprise software and data background, having spent time in Salesforce, and digging in, I realized that there needed to be sort of a new focus and a niche focus within the VC space on this specific area of the space technology world. And I was well equipped to do it. And so my, the thesis of our firm is investing at the intersection of big data and space technology, and bridging those two worlds of traditional enterprise data and technology and the space technology world. And I'll tell you this, that I lead with that because Salesforce Ventures and my previous job was pretty good. And I put time there, right? And I can't, I have nothing negative to say about that place, and the culture is phenomenal at Salesforce and Salesforce Ventures. And so it's really having that background. I really just felt this compelling calling, Darius, right?
Right.
It felt like more than venture capital. It felt like more than just career. It was this compelling calling to do this for the benefit of our lives on Earth, and that the infrastructure around that takes a specialized expertise that I happen to have. And that's what drove me into it. And the reason that this is important in my view, Darius, is that when anybody has called me and asked me that they want to be in venture capital, the one thing I always say is, have you invested in companies? Have you advised any founders? Have you dug in? Have you done a small little startup on the side? Because you have to, the proper way to do this business is not to be obsessed with financial models or not to be obsessed with Twitter. It's to be obsessed with the businesses. And I'm so obsessed with these businesses and the problems they're solving that the calling was too strong to not do this. And that's my purpose. That became my why. And as hard as it was to leave a really good situation and stable career, it felt like sometimes you're the right person at the right time. And I felt that.
Yeah. I mean, definitely a niche. And my opinion is being in the niche is important, because then you can understand where the value add is. I think at one point, right, like everyone was a generalist investor, and then it was, hey, let's move into software. And then it's, okay, well, let's get into AI. And now it's, all right, well, we specialize in a niche within AI. Maybe it's Gen AI, right? But just as you have to have some sort of an edge over the next person who's willing to invest in and know if it's a worthwhile investment opportunity. For founders who might feel like this might be the right investor for me, how would they know? How would they know if they fit within inside of your investment thesis?
Yeah, it's a great question. We focus on 3 specific areas. These are not all inclusive, but they sort of fit the areas we focus on. So space data as a service, and I say that as companies that are generating unique data sets through space-based assets, data that cannot be generated otherwise or on Earth, right? The second, or the data tools and infrastructure around space, you could call this the picks and shovel of the space data world. And that, that's just a term just to display for listeners, just to display foundational infrastructure investments in the venture world. But the picks and shovel approach to what I'm considering to be the modern data stack of space.
Mhm.
We've built a modern data stack of the enterprise landscape, and terrestrially, there we believe that there will be a modern data stack being built for space. We are already a part of some of those conversations, and there are some really compelling technologies that are going to be introduced to the world soon. The last is enablement software. And so this is saying that, like almost every other industry, vertical software is becoming a bigger and bigger thing because we have these large scale platforms out there.
Mhm.
The software side of the space industry can go anywhere from testing and mission ops to helping regulatory processes. And we think all those things are going to enable the space industry to continuously flourish and to have faster, streamlined processes. Not all you think about space and you think about governments playing in there, you would think all the processes are kind of slow. Some of the
Mhm.
processes already pretty well, they're going pretty well. What we know is that in any business line that's growing, in any industry that's growing rapidly, you're going to need better and better tools just to service all the activities around that, just to make it easier to access and such. And so space data as a service, data tools and infrastructure for space, and the last is software that enables the entire ecosystem. And so those are sort of the areas we play in. And while I think that there are a ton of interesting places within space, like there's some interesting things happening in propulsion and rocket technology, in space servicing, and some of those just don't sort of fit where our expertise and where we believe we have an edge in,
Right.
and also where we think we can truly add value to founders. We know that anything associated with data or data infrastructure and software, we can play a pivotal part of the founder's journey and the company's journey. And so that's how a founder would know if you sort of fit those. Yeah.
Yeah, and you alluded to the founder's journey. I think a lot of founders either don't know or just don't understand that the VC, your journey it mirrors the founder's journey, right? So you don't, while you may end up with a 25 million, 50 million, 100 million, whatever size fund, your first fund is, you don't just start with that, right? Like there's this process. You have to go out, you have to talk to investors, many investors, in order to actually raise the fund. You're not just, hey, this is my family office money in most cases. Some cases, yes. But curious about your fundraising journey thus far, right? How,
Yeah.
kind of what's been your approach? What have been your thoughts around kind of, how you've built out this first fund?
Yeah, it's a really great segue here. We are working through fundraising right now. And I think we're currently raising capital from some high net worth individuals, families, family offices. And I think about my journey in venture very similar to founders, like you said. So founders have family and friends around pre-seed, Series A, Series B, Series C, Series
Mhm.
D. While there may not necessarily be a sort of an end in sight for a capital manager, I see the journey is very similar. So
Mhm.
first funds are typically on the smaller side, unless you sort of have a 20-year career and a
Right.
long-term record, and you just decide, like, very few investors sort of spin out with that. And so just like some of the founders I'm investing in are at their seed phase, I'm at my seed phase
Mhm.
technically.
Mhm.
And so I'm raising a certain amount of capital from individuals and families, once again, as sort of my sort of family and friends or pre-seed seed type funding for our business. And the way we think about it is that this is a bit of a new field for many people.
Mhm.
Although we interact with this parts of space technology like GPS or watching television, their television is distributed through a satellite network. There are new pieces of this industry. Most people don't know what the underpinnings of it looks like. And so just like founders are trying to prove out their ideas and say, hey, I've worked in this industry, I know this problem needs to be solved, and I'm trying to sell you that this is a real problem that can be monetized. I am doing the same thing with potential investors. I am saying, hey, I know this is new to you. This is not, traditional consumer or social media. This may be new to you, but this actually underpins so much of what we do. I think there's a lot of upside here. This is how we think about managing risk. Once again, I lean back on those early career experiences. This is how I think about managing risk. This is how I think about managing duration, right? I mean, companies have to return their capital within the life of, or have to exit, or I have to see some sort of monetization opportunity within the life of my fund.
Mhm.
And so all these things are very similar to the ways that founders have to communicate to raise capital. I have to communicate very similarly to my prospective LPs. And I would say fundamentally, it's, this vision for how you see the world going and changing within 5 to 10 years. And then how do you manage the risk of that? Because managing people's capital is a tough job. No matter if you're a founder, you're managing their capital in one business, or a VC, you're managing capital across and investing it across multiple businesses. It's tough. It's a tough business. And, managing risk and risk mitigation, thoughtful risk mitigation,
Mhm.
taking the right risk. All these things are risk, right? But you're taking the right risk at the right time. It's all difficult. And so I always feel like founders and I are very aligned. But I will say this: at the end of the day, my job is to allocate that capital to advise founders. Founders have a much harder job than I, because day to day, they have one company they have to obsess over. If anything goes wrong with that one company, that's it, right?
Right.
I will have a portfolio. And that portfolio, there will be companies that do well, companies that don't. And so
Mhm.
I'm sort of also matching probabilities here with how I think about things. So I may have 10 companies to worry about at a time, while founder has one. That's a much more difficult job, is to have all those eggs, one basket, and all in on it. It's a different job once the capital gets through the door. And I just respect founders so much for taking on that journey and that concentrated level of risk. I think it's one of the most commendable things that you see in the world.
Yeah, definitely, and interesting to see it now, operating a business, right? And you've got all of these moving pieces. And, I was always told, hey, when you step into the room with the founder, be humble, because a lot of times you get investors who step in and say, do this and this, never had operations experience. And the founder's like, yeah, if I do that, but the business breaks. It sounds good in theory, right? But the business breaks. So, just kind of being somebody who understands that, I mean, the investment side looks like you develop a certain perspective on the market, on businesses that is unique, but there's another unique perspective that you develop as someone who is actually building and operating the business.
Yeah, and I would say that look, listen, there are a number of things that, having worked at a sizable, respected venture-backed company, having worked at other large institutions, and done some entrepreneurship things of those, I can relate to. Right? I can relate to founders' plights and like
Mhm.
concerns. But there are a number of things that I cannot relate to. I can't say that you know, started a company, built it up, sold it, started a company, built it up, sunset that company. I can't say that I've done that individually.
Mhm.
And so I always try to lead with founders who I'm excited about, or those who I just think have a really good opportunity to build something strong and enduring. Is that I'm not trying to micromanage you at all. I'm not trying to tell you what to do. My job is actually to work on your behalf.
Mhm.
And so at any given time, I should be out and about evangelizing your business, talking to people about your business, and you telling me what you need, and I'll go out and work on it and execute. And I can't always promise those results, but I can promise effort in that regard.
Mhm.
And so that way, when we sit at the table, sure, I can give you some thoughts based upon some of my experiences seeing very valuable, successful businesses. But more than that, I'm just bringing a work ethic to be, if not hands on keyboard, just sort of hands out in the world to help the founders get where they need to go, and not just being bothersome on random things that don't really move the
Yeah.
needle for founders.
Yeah. No, so this is an excellent setup, because I wanted to turn back to what we pinned in our conversation earlier, and just thinking about, all right, look, I'm a founder. I'm hot. I'm hot about these enterprise deals. What are some things in your experience that you've seen that have worked really well for founders who do want to land these enterprise contracts? And what are some cautionary tales? What are some things founders should look out for as they do pursue that go-to-market strategy?
Yeah, it's great. It's Everyone thinks about things in terms of funnel, and I agree if you're trying to get in front of a certain audience. But there's sort of two ways. The first is that although someone cannot have a vast network and think that, okay, if I wanted to get to the chief information officer of a Fortune 1000 company, I can't get to them. I would first argue that if you want to get to enterprise, first thing is don't start spamming inboxes. Go to your immediate network, the people you know. If you have 5 friends, go to those friends and ask them, hey, do you know somebody at, I don't know, Darius, name a Fortune 500 company.
Apple.
Do you know anybody who works at Apple? And those 5 friends may say, no, but I know somebody who knows it, who works in tech. Okay, can you introduce me to that person? Maybe that person works for Uber. I don't know, Uber, right? A tech company that everybody knows. And then you say, that person says, oh, I don't know anybody that works at Apple, but I have this buddy who lives in San Francisco. Let me introduce you to them. And next thing you know, you're 5 phone calls in, and someone introduces you to the vice president of IT at Apple. The reason I bring this up is because the sales cycle of getting to an enterprise level customer, if it goes through a traditional BDR and AE sales funnel, you're susceptible to one, the work ethic of that one person working on that one account.
Mm-hmm.
2, their pitch and whether it's tight or not, and whether they convey specificity to that customer. Also, you're susceptible to personnel risk, right? So let's say a salesperson just isn't hitting their number and they leave the company and they have to, you have to hire a new AE in that patch. You're now at a 2-year period and you haven't gotten to anybody at Apple that you wanted to get to.
Right.
And so I actually think people underestimate the power of just asking your close networks, friends, former colleagues, whatever, hey, do you know somebody here? And even if they don't, take the next phone call and take the next phone call and take the next phone call. And I think as a founder, that's how people should be thinking about it, right? Now, once you get into that conversation, this is where I've seen really interesting things, is that if you talk to the typical chief information officer or chief technology officer at a Fortune 1000 business, they're actually worried about solutions. They're so high up in the executive team that they don't have all the context for all the small nuanced issues. They're worried about, like, how does this drive business value? So you have to think, anybody in the C-suite, anybody in the management team or executive team or on a board, they're worried about how does that tool drive business outcomes for the broader business. And so to speak to that type of customer, you have to be willing to speak, not in terms of niche features, but in terms of what is the impact this can have on a business, right? And so one example I try to use a lot is that you'll sometimes hear within this audience where they talk about, like, hey, let's say, for example, a cybersecurity solution. They may say, hey, this is a cybersecurity solution. Great, you identify my threats. Can you fix my threats? And right. And so the platforms that identify and solve the threats are the platforms that do the best in the cybersecurity, right? The platforms that just identify them, they can sometimes be at a disadvantage when a chief security officer or CISO is saying, I need you to just do this. I need you to give me the outcome, right? And so when I think about getting to enterprise level conversations, it's twofold. It's getting to the conversation, which I think is slightly different than some of the more specific or some of the more broad advice founders would get about sales funnels and AEs and prospecting lists and all that. If you want to get to the Fortune 100, there are only 100, right? So you don't have a funnel of 10,000 to get to a 1% outcome, right? So you have to sort of come at that from a differentiated standpoint as a founder. And then second, once you get into the conversation, you have to speak business outcomes and not just niche features. And to me, when you do that, you put yourself in the best possible shot to get those enterprise customers who can really jolt your business to the next level. But also those enterprise customers are going to challenge you, right? So we haven't even talked about what it means once you get the enterprise customer, your first enterprise customer that's really large, what that means to deliver against what you've promised. That's another conversation. But just to get to that point where you have the ability to sell the business outcome that your platform or your software or your data can solve, that's when you're in the ballpark, right? That's when you're swinging, and that's when you have the chance, right? And all you want to do is give yourself the chance, because you can't control for enterprise customer budgets.
Right.
You can't control if the CTO likes a different platform because they've only worked with that platform for the past 10 years. You can't control all those things, but you can control your ability to communicate business outcome to a C-suite stakeholder at a large Fortune 100 or Fortune 500 business. That's the advice that I give founders every day.
Yeah, super helpful. And I've heard of and met founders who have built solutions for Fortune 100. In terms of tech, and I think you alluded to this earlier. There are some considerations that should be taken. Some things that should be taken into consideration that maybe if you're building for Fortune 100 is going to be different than if you had built something for SMB. Any thoughts you have around that?
Yeah, building for SMBs is much more of a volume game, and it's almost community like, right? So like you have the stats and the ability to say, oh, hey, this company, or hey, I have this set of like 500 customers, and in those users, I see this happening, I see this happening. We can add this feature, we can do this. You're not going to talk to every one of those customers like you will on an enterprise landscape, right? It's much more sales funnel, get your AEs in the right place, get your tracking in the right place. And building that product, you can generally, for SMB audience, do more sort of testing, right? And so if you think about that, like an SMB customer may have 10 employees, 20 employees, 100 employees, right? So you can test some things, you can play out with some features, you can sort of put out something that's sort of imperfect and just see what the take up is before you ramp it up. I would argue in the enterprise context, if you get in the room with a Fortune 50 company and they sign an LOI, or you guys go under a POC contract, you cannot get anything wrong. And if you do, your communication strategy needs to come from the CEO to your executive stakeholder at that business, right? Because if you start getting things wrong, what they're worried about is you're going to get it wrong for 50,000 across 50,000 employees, or you're going to get it wrong against a $200 million budget. That's a completely different risk profile. We've been talking about risk this entire conversation, right? But it's a completely different risk profile of getting it wrong. And the deeper you go into the risk of like financial implications of getting it wrong, cybersecurity is one standpoint. That's where the issues happen, right? So if I bring this into sort of my world today, when I think about space, I've spent a lot of time talking to leaders at Fortune 1000 companies, understanding how they think about the data sets that can come out of space or will come out of space. And some of these companies are already using space-based data sets, such as in certain agricultural businesses. But now we're talking about the next generation of those data sets. What exactly do you need, and what are you willing to pay for incremental benefit, right? So if you have a platform, right, and this is a typical enterprise customer issue. If you have a platform in place, you scheduled out sort of a 7-year usability cycle before you went back and chose re-up that vendor. Someone asked you to rip it out in year 4. The business benefit has to be so massive, right, that the cost of implementation of that previous product, even though it's a sunk cost, we know about the sunk cost fallacy, even though it's a sunk cost, it's done. In somebody's mind, they're like, we already spent 20 million implementing that solution. Yeah. So what do you give me that's going to benefit me at least more than that 20 million? Yeah. Plus whatever it costs to implement your solution, plus what we've already spent on that solution in 5 years, plus any breakup fees we got to pay with the other vendor. I mean, you're talking like, can you benefit me to the tune of $70 million?
Right. Yeah. And that's interesting. Getting back to your point about speaking to solutions, right? I mean, look, it's easier to sell the solution than just, hey, we've identified the problem. It's easier to sell the solution. And so in just thinking about like understanding what is their existing solution? And to your point, if they still have multiple years left on that contract, what do I need to say to show that the incremental benefit of input, like ripping and replacing, with me just makes more sense. So yeah, no, that's actually a good paradigm to have in thinking about kind of approaching those types of customers. I know we're coming up on time here, but I do want to leave a few minutes. Couple things, because I know you're in fundraising mode, so we'll assume there's some LPs out there listening, and even potential founders who have identified that they sit in your space. We'd love for you to share anything interesting coming up in 2014. We just stepped into Q2, and as well, would like you to share how they can reach out to you.
Yeah. Well, thank you, Darius. And look, I would say to anyone that's thinking through where the world is headed from here, and how do you align your own personal investment strategies with where the world is going. I think space is a fascinating place to be thinking about. I think if you're a corporate executive thinking about how do you push your company forward, I think you should be thinking about what is happening in space and what are those data sets and how can they affect my business. And if you're a founder, especially in the space technology realm, and you're building something that has a large scale data component, I think one, I'm sort of biased here that I say you need someone at the table who's more enterprise data and enterprise software centric. I'm not saying that has to be everyone at the table, but you need someone at the table. Obviously, I think I can fit that bill in many cases. It's very broad, like broadly, you need that. And also continue to build to the solution, what problems you're solving for very specific clients, and be very client oriented, client obsessed, customer obsession. And I'm always happy if you're building in space, if you're building in space data, I'm always happy to just have a conversation with you and throw out ideas. And so lastly, you can reach me, you can reach out, you can find me on LinkedIn. It's Theo Williams. The name of our firm is Third Vector. And you can also email me at theo@thirdvector.ventures.
Awesome. Well, man, it's been interesting to go into the space. I don't think I've had a space conversation so far. So it's been interesting to go into, man, and I'm sure folks will get a lot of value. So Theo, definitely appreciate you spending some time with us, and we'll definitely have to keep up to date on everything that's happening with Third Vector.
Yeah, well, thank you so much, Darius. And I love what you've been doing as well. And I appreciate you giving me some time to share and evangelize my message here. And until next time, when we have an update and we're talking about things that space tech is doing for people and more people know about it.
Awesome, man. Awesome. I appreciate it.